Yo,
Hello.
what is going
Hello.
up?
Welcome to Monday. Tex and Ads here with you for another UTG market update. Of course, if you're picking up what we're putting down, make sure you hit that subscribe button. A modest little milestone for us this week. We hit 700 followers on YouTube. So it's a small amount, but that's very humbling. So thank you to every single one of you that's ever watched, commented, or subscribed or anything like that. It really means a lot to us because we do this
Yep.
off our own backs and have been for the last few years. So pleasure to have you here. All right, let's get into this market. Uh, yeah, a nice little run this morning. So, you know, we often see nice little bits of volatility or action come Monday mornings. Last Monday with the weekly close or the daily close, rather, it was a little bit volatile to the downside as we saw this week. A little bit more positive. We have some nice USDT pair runs. A number of the BTC alts have pulled back over the last week since BTC had been declining. Since that sort of 38K level, we'd seen a number of BTC pairs flourish. As we had mentioned, we had said a few weeks ago that it was looking likely to be a little bit of an alt season. Don't like using that word, but a little bit of a time for alt BTC pairs to run. We've certainly seen that in the last week and a bit. We're at a little bit of an inflection point now, that 50 fib and that top supply. Could it be a double top that we're having here? And just very quickly in this as well, if you haven't had a chance, we got asked a question inside, or someone posted a chart earlier today inside the Discord and said, "Oh, I'm frustrated because I got stopped out on this move. This, psychologically plays with how I set my buys and my sells or my take profits or my stop loss sorts of areas." And we were talking about this pin bar reversal just here. And what happened was, and in by no means is this the wrong way to trade. It's not us to tell you how to trade, just we simply show you how we trade and maybe what we would have perhaps done a little bit differently here. And what he had was, I think he had his stop down to about maybe that fib level, that 78.6 level. Let's say it was about 29 there. And he had a take profit level, I think, of about 35 or 34K. I can't quite remember. And unfortunately, he got stopped out on this move. And he said, well, this is what frustrates me the most. If you haven't had a chance to go and watch episode 1 of the UTG show with Ads and I, a few weeks ago, we spoke about how you, rather than catching knives or trying to catch exact dollar amounts on demand levels or taking profits on supply levels, you layer buys and sells with what's called a dollar cost averaging strategy. So if you bought the top here and you sold out here and you're trying to catch it down here, what you could potentially do is looking at, you've bought your top level, you could look at potentially allocating 10% of your capital to a buy on the 38, 20% on the 30, 20% on the 61.8, and 78.6 with another buy. And then what in my case and what Adam's case is what we do, we will often set cheeky little buys down towards 24 or 26 on the off chance that we get overextended wicks like this, where we're testing liquidity in these zones, and we're likely to see these wicks to the downside or these quick pin bar reversals where they're quick snap sells to the downside. There's a ton of liquidity sitting here, and it's bought up quite quick, as we sort of saw here. This selling climax and this automatic rally or this automatic reaction that we had off this particular level. So if you are buying tops and selling bottoms, you might look at perhaps a dollar cost averaging strategy. And the same can be said when you buy here. And rather than taking profits at this exact demand level, you would layer in sells or take profit levels on the way up to those significant levels. So Ads, I'm sorry to ramble a little bit, but it's great to see people being so open and there being no judgment when we share that sort of thing inside the Discord. So UTG episode number 1, Ads.
Yeah, and look, the DCA strategy works really well. It does for me. It does for Ty. We've been doing it for quite some time now. And when Ty says 10%, 20%, that's
just examples.
Just examples. We're not
exactly
saying
right. No.
That's how much capital allocation we're putting in. No, that's not the case. It's always risk calculated and everything like that. The general rule of thumb is 3 to 5%. Of your trading portfolio on the trades. So that's what we still employ. So look, it can be done that way. You just got to break up the trade a little bit more and obviously assess those levels as you see fit. But anyway, rolling back to BTC and speaking about this double top area here at the 50. That was the area that I was really looking for currently. So what we're really looking at the moment for BTC, we're looking at a bit of a trading range between this supply level and this demand level. But the thing that does worry me a little bit, not worry me, but the thing that does speak to me a little bit more to the downside is because we've broken this structure here to this level of demand that we've bounced off once before. This has been eaten through. Although we have respected it just today, however, if we get some meaningful, we can say meaningful volume to the downside, of course, this level will snap like a twig and we'll be moving down towards that 28,000 level for BTC. That psychological round number support for at 30K can only hold so long. And that's the thing we really need to look for, and that's the thing we really need to remember. Don't date them, just trade them. It really comes down to you need to identify these levels. We need to identify the TA that we're seeing, and then of course, if we are, pending a move to the downside, we need to accommodate for that. And if you're using a DCA strategy, it might be have some cheeky buys down below here, like Ty did mention just earlier. But in any case, that double top scenario looks like it could be the likely outcome. We need a few more candles to really confirm that. And we need some movement and some volume towards the downside to break this level of demand for good. Of course, it has been broken to the left here, like I said. But if we are to move to the downside now, I'd be looking at this 78.88 and of course our level of demand. So 29.27 and of course 27 even for our level of demand here on the 4-hour time frame. If we do move to the upside, the first thing that I'd be looking for is some price action entering this level of supply. And if we do get a movement to the upside, of course, we probably will retest, this area here. And that was terrible. I was holding the wrong button there. If we do, we could probably retest that level at 37 if we are to move to the upside, but that remains to be seen. I know the indicators are looking like they could probably move to the upside, but if I throw on our gravy train indicator that is in development and of course be releasing hopefully next month in Feb, we are looking at a decent level of resistance, and that coincides very nicely with our level of supply there, Ty.
Yeah, I totally agree with that. I'm being more and more cautious on the sort of double tops that I'm seeing on BTC as of late, because if we look to the upside there, we had something sort of similar here. Let's do that again. We had something sort of similar there where we had a nice little buy up off what's now this sort of supply level, but a sort of a pin bar reversal off that 50 and a nice sort of buy up, and then a decrease again I'm thinking this is my own chart. I'm charting it like it's my own chart. You idiot. Yeah. So I'm cautious of those things, but admittedly, I'm still in a BTC position after buying at 30K through my sort of my dollar cost averaging strategy. So I'm cautiously optimistic because, as Ad said, we do still have room to move on the indicators. Steamroller. The first rule of trading is never ignore steamroller. So we had a really nice seller exhaustion and buy up from that level. One thing I am paying a bit of attention to is this RSI level on the 4-hourly. So if we were to break and close below that 4-hourly and sort of, let's say, this level here at around 32.7, then I would probably be a little bit more, optimistic of potential buybacks down towards this demand zone. So still, quietly cautious here. We saw Grayscale and a lot of BTC institutional buying at this level. Although when we do look at the Grayscale trust, there was a pretty decent trust. I think it fell around 22% in the last sort of 2 weeks. But the on-chain metrics suggest that there's still quite a bit of aggressive buying at this sort of level. So that's where you've got to be of that institutional investor, short-term trader, swing trader, whatever you are. You really got to knuckle down to identify what type of trader you are. Go and have a look on YouTube for that video we released last week. So this is where, are you holding with the anticipation that we head back up towards all-time highs or that top supply level at 37, or are you short-term trading and buying off demand and selling at supply? So that's pretty much, I think we're pretty much aligned on that one, bro.
Yeah, look, it in any case, if we do move through this level of supply at 34 and we do get towards that 37, that 37 is going to be the most relevant to me because it is on a swing target there and it is on a pivot. That will fulfill the market cycle of Steamroller. If we do get towards that 37K, that'll be that market cycle, and that would be nice in the way of price action. So if we do get that, fantastic. But we just need to make some grounds inside this level of supply, like I said, to really confirm that direction is going to be met, or that expectation is going to be met.
Totally. All right, let's get on to, actually, you know what I'd really like to have a look at is the BTC dominance very quickly.
Absolutely, bro. I've been looking at the BTC dominance in my personal time, and looking like we are free falling.
A decent drop. So looking at the BTC dominance, it helps to give you an idea of how the market will react to BTC, what we can potentially expect. Obviously we can see that when BTC dominance is high, that's where the majority of people are trading. When it starts to decline, that's when we know also that these BTC pairs can also have a little bit of a run while BTC consolidates within a particular range. That's often when we see BTC pairs having a nice little move. But Steamroller slowly entering into that oversold condition with the likelihood that that demand zone may be met again.
If a word of warning, okay, if you're trading BTC alts or altcoins in general, make sure you're looking at the dominance chart. Because if we get to this level of demand at 62.11%, okay, and we do have an aggressive bounce from there, it's going to ruin all your altcoin trades if they're paired against BTC and USD, I guess. So just make sure you're looking at this chart, because if we get an aggressive bounce, then those alts are going to fall pretty fast, and they're probably going to give all those gains back. Not all, but you get the idea. They're gonna fall hard and fast if we do get an aggressive bounce off here. So looking like we will get that 62.11 or 62.11 level of demand be hit over the next probably day or so. And I think we are on that trajectory quite nicely. The indicators look like we could probably get there. Steamroller in particular, because we have been quite overbought and we haven't been quite oversold in quite some time. So it looks like we could get to that 62.11. That decision will be made when we get there though. And look, I'm ignoring this wick to the left-hand side because in my opinion, this swing level, this 62.11 level of demand is still in play. And I think it might get that bounce, even if we just get it to around here, Ty, where we see, actually I'll nip that up just a touch, because I'm looking at this parallel channel, or this level of supply here, which would coincide nicely with a lot of liquidity that we're seeing to the left-hand side. So that would be the bounce that I'm looking at, something along the lines of that.
Yeah, and if you go to your 4 hourly, go down to the slightly smaller time frames, and you chuck on the likes of Gravy Train or Unicon for that matter, you can see that our cloud resistance kind of aligns quite well from that. If we were to sort of have this particular move where we head down, we bounce slightly, and then we head back down towards that demand level, I think is pretty likely.
Speaking of Gravy Train, we did run a beta test over the course of the last 2-3 weeks, Ty, I think it would be.
Yeah, we did. Thank you so much to those boys. That was a lot of fun.
Yeah, it was. We got a lot of good feedback. The guys had a good time with it. Made some money, of course, and I look forward to recording a lot of this new content that we've got for Gravy Train, and hopefully you guys will enjoy it too. So be on the lookout for that stuff on our Discord and of course YouTube.
Totally. Can't wait to share a little bit more of that. All right, let's get in to ETH as we start to add some time onto this stream. Again, similar story to BTC. On Thursday night, we spoke about, or between Ads and I over the last few nights individually, we spoke about Ethereum and this 78.6 or this demand level. If you zoom out just a touch, Ads, I said that if we continued down, I said it would be, in my opinion, it was going to be unlikely that we got to this demand level around that 950, 960. I said I was looking for some sort of snap reaction like that. at the lowest down to sort of this particular demand level, a quick buy up, and fortunately that's what we had. So we've had a nice reaction again, reversal off this particular level, and we made a new all-time high today again, Ads.
Yeah, and look, it really pays testament to the DCA strategy again, where you've got two levels that are close together. So instead of just focusing on the one, you split up the orders and you put them on both. So, if you were just betting on the bottom one, well, now you've got some skin in the game for this move into the upside. But anyway, moving back to the question at hand, yes, we're at all-time high, which looks really good for Ethereum, honestly. We are trending above that 50 RSI. We are losing a bit of strength at the moment, a little bit of exhaustion playing into the price at the moment. But if I would be looking for a movement to the downside very slightly, we could one of two things. We could come down to here at 1380 and retest that the top of that level of supply, or we could come down to the 23.6 where we see a lot of this liquidity sitting here to the left hand side, and that would form part of our support for Ethereum before making that decision if we're going to continue to the upside. That first target would be, of course, that negative 27 extension at 1583.
Yep. I would say that's pretty much aligned with my thoughts. Sort of 1350 to 1350 to sort of 1330, I guess, is kind of where I'm looking for a potential bounce on ETH. I'm yet to take profits. As I said to someone in the Discord earlier today, now this is just me again, and probably being a little more transparent than what we should, but I have an allocation of BTC, ETH, and LTC that I'm not touching until the end of the year, and because I'm confident on the continued moves of all of these. Not financial advice whatsoever. This is just what I'm thinking, and I'm primarily now just trading ETH, BTC, and LTC, and the odd little bit of ADA USD pair. So I'm not aggressively trading and trying to chase a whole bunch of USD or BTC pairs that are moving. I'm happy to focus on three, identify how they move in certain instances, and swing trade them accordingly. So that might be something you might like to do if you want to simplify your strategy or not have 10, 15 coins on the go. Especially, it's very easy to FOMO into a lot of coins when you see things mooning 20, 30, 40, 50% overnight. But play the long game and play to your strengths, and focusing on fewer coins but higher quality trades could be something that you might benefit from this year.
Absolutely, bro. Absolutely. Can't stress that enough.
All right, my own selfish reasons, LTC, please, Ads, would you mind charting that up for us and telling us what you think?
I can do that. Is that? Yeah, that's still in play. We'll draw that over a little bit. Okay, LTC. So basically, swing high to swing low. We're looking at where the price will go. So basically, we've had a bounce off that $123 mark, and that is aligns pretty much with Ethereum as well, and goes back to what I was saying before, where we're looking at a DCA type ordeal here, where you could have orders on the top level of demand and the bottom one, split it up. DCA yourself, make sure you're into the market, and of course that pays dividends again for this instance. But looking at this 149 level, Ty, we really need this to come up to 149 and give us a really good test and break of that 50 level to confirm a continuation towards at least the 160 mark for now. If we don't get that, we could see it come back down towards our 38.2 at 40. So of course the two levels in play at the moment, but in any case, in the smaller time frame scale of things, we've been making some movements to the upside. So it looks okay for just a movement towards that 50, I guess.
Yeah, that's kind of what I'm banking on, admittedly. Pray for mojo.
Yeah.
No, what I'm hoping is for a bounce, or at least a move around that sort of 138 to 135 level. If we look at the Unicorn fan on our 4 hour, that aligns pretty well with our 200 MA. Our EMA fan. Sorry, brother. Right down to the bottom there. So you can see that our 200 MA has acted as a nice little area of support.
Yeah.
We're currently sitting above this EMA cluster being the 50 and 100. So what I'm hoping is for this little range to hold. And then, yeah, I'm looking for a move back up towards sort of 160, 164. Hopefully, if we can get to that particular supply level. So I was fortunate enough. I really did just make it by a bee's dick at 123.33. 123.33 was my buy on LTC. So I've taken a little bit of profit on the way up, but admittedly, this is what I'm looking for. And my own bullishness and I guess stupidity on LTC, if you want to call it that. I'm pretty aggressively buying any sort of major dips that we get at the moment on LTC. And that's just me. This isn't financial advice.
That 50 RSI though, that'll be nice.
Yeah, that would be very nice. A nice little bounce here would be lovely.
Absolutely, and I agree with that. But we'll move on for the last one of the evening. Of course, the DXY being a regulated market, not financial advice, just ideas and opinions of Team UTG. We've been following this market for quite some time now, pretty much every weekday for the last 6 months now. It's been
give or take.
It's been relentlessly on point and easy to follow, to be honest with you. We still employ the same supply and demand strategy that we were always used to. And of course, it's paying dividends because we're looking at trending markets and we're looking at zones that are, of course, being tested and untested, but looking like we are going to move back towards this most relevant swing level now. And that would be 90.04 and not far away from it. So being a Monday night, we're getting decreased volume in the regulated stuff. So looking likely that we'll see 90.04. But if we are to continue this bearish momentum for the DXY, we'll be looking at the likes of something like that at 89.79 or 89.80 would be the area that I'm looking for. Not because of a specific level of demand, but because of the liquidity that we have there. Support resistance flips are very nice to look for liquidity. And of course, if we put the VPVR on, we probably won't get a result. No, we won't. But we can even just see the liquidity, say that 10 times fast. We can see the liquidity to the left-hand side, and that's where I'd be banking for the DXY to go, of course, pending the break of the level of demand. But that's really it. There's nothing much more to say about this. We could skyrocket to the upside, of course, off this level if we do get some more momentum in this, of course, probably Tuesday, Wednesday night in terms of Melbourne time. And if we're looking for movements to the upside, I'd be banking on some of the Fibonacci levels to tell us where that will go or end up, Ty.
Beautiful. Thank you very much, everyone, for watching this. Of course, if you like what we do here at UTG, we do this for free all the time. Make sure you hit that subscribe button and get daily instant updates every time that we go live and show you very openly and transparently what we are trading in this market. Until next time, thanks for watching and trade safe.
Catch us later.